What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now and part of the Chart Guys team for a bit more than half of that, where I head up our futures room and, of course, our swing report. So in this video, we are going to take a look at all of the hype sectors that we are keeping tabs on, and then also do a little bit of a market rundown and, of course, update on any of those ideas from these sectors that we touched on last week. So let's get into it. All right, so starting off with NVDA, we're going to do things a little bit differently this time and do all of the, I guess, like the hype sectors first. I get the sense that that's what people care more about than the overall market. So anyway, NVDA here, there's really no red flags. It seems like we're probably going to keep on running into the earnings. This run is probably anticipatory of whatever earnings is, what kind of earnings is going to shape up, just like this run into earnings here. So we shall see. But as of right now, the reason why we're covering AI is because, all right, so essentially you have QQQ tech for market bulls, right? You want to see QQQ lead. And for QQQ bulls, you want to see semis lead. So semis typically lead tech, and tech typically leads the market. So as long as the semis are still doing okay, then there's not really that much to fret about, which is why recent picks with this swing report have pretty much been very focused on semis and AI in general. Obviously, if you want access to those, then check out this swing report. Links in the description below. So again, NVDA, no red flags at all, and these buyers are going to be totally comfortable as long as they can hold over this guy. Really, this was the last major breakout point over here at 634.93. So as long as these buyers can hold over 634.93 and particularly over 615.99, the point of control where all of this balance was, these buyers are going to be fine. So space for a daily higher low, anything over 663 is going to be good for one. Weekly higher low as well, tons of space for that. Yeah, that's pretty much it. So very aggressive operators, you can be using this a little bit of sideways action here, because essentially on a lower time frame, the idea is as long as this structure remains in play, then these buyers are doing just fine. So even something along these lines where you use the entire structure is reasonable, but you see how the volume drops off over here. You probably don't want to be too much, too deep into this guy if these buyers are going to stay as strong as possible. So something like this would be pretty reasonable. If it does hold this area, then you're just going to be looking to test these local highs, chop it up, throw your stop under the low, and then if it continues to press, then you'll be sitting pretty. So that is pretty much it for NVDA. A different kind of an operator. If you're familiar with volume profile, then you could also wait for the value to move lower for a few sessions, just like it did over here. All right, so here you have value moved lower for this session. Over here, it spent the majority of the session under the point of control. So and it broke over the prior day's low. So this was daily retracement, as Dan often teaches. You're looking for that daily higher low on the 6th. So the 6th is back here. That's this guy right here. Right, so this is potentially going to be the daily higher low. If that's going to be the daily higher low, what these buyers need to do is to find acceptance over that day's point of control. So you can see that you got an open above that day's point of control. You move down through the point of control. You don't find acceptance. Roll back over it. You can buy that move over the open. Throw your stop under the low of the day. Would have only been 1% risk, and then look to chop it up no later than this high of day over here, which is roughly 2% risk. So pretty much a 2R multiple trade. You can do that same exact play if you see value move lower for a session or two or more, doesn't matter, as long as you don't violate the last daily higher low, and then look for this same exact play. This play will make you money. I freaking guarantee you. This is probably the best setup that I don't really know of any better setup than this. It's incredibly straightforward. The context is easy to identify. The initiation is very easy to identify as well. It's no acceptance under the prior day's point of control, and then a move back over the open. You can be aggressive even and do it over the POC, save yourself a little bit of risk, but it's a little bit earlier than the open, because you know that the buyers have to get back over the open in order to say the cash market buyers are in control and move value higher. Okay, so that's pretty much it for NVDA. I know we covered SMCI last time as well, but honestly, I think we can just cover one at a time. It's pretty much the same idea here. Like, this is definitely setting you up for a bit of an elevator move eventually, but as of right now, there are no red flags. So the tone, the general tone sentiment out there is still very much buying. And even if you were to fall all the way back down to here and lose 50% of its market cap, it would still be okay, because as long as they can hold over this guy, it would still be fine. It would still be structurally, it would still be a fine chart. So, no red flags for SMCI. So Bitcoin, here we go, finally hit target from this trade zone that was shared. Again, if you're a subscriber in our regular Slack room, then you've been watching this since December. So this now has hit target. At this point in time, if you're still holding on to anything, I mean, if you're still holding on to a full position, you're probably being a little greedy here. Makes a lot of sense to just chop it up here, throw your stop for the remaining position under here, because this is already a 20% gain. So this is super key here. If these buyers can clear this 12.5 to 1.4 structure, that would be incredibly notable. They have not been able to do that since all the way back here in 2022. We've not seen any acceptance over this. So in the short term, in the next coming weeks or whatever, if you do find a breakout over this area, back tests of it are also very reasonable, such that if you were to see something like this, a big move above, look for back test over here. Your stop should be somewhere under here, no later, I should say, somewhere under here. And if they do hold this area, they should be trying to come here next, this 56K level or so. And that's just because you have this next area of supply to work through. That's it. It's just very systematic, one step at a time. I guarantee you, if we find acceptance over this structure, they're going to be trying to come here. Okay. So that's pretty much it for Bitcoin. I would wait for this. Otherwise, this trade zone is actually still valid. If you reject from here, just like it was still valid after we came in here and then came down here, as long as this area is supportive, they should be trying to come here. So even if we fall back down into this area down here, you can use this trade zone again. Obviously, it's not as desirable because the buyers have used a little bit of buying power already to get us over here. So it would be a bit of a red flag to come back down here, but this idea remains valid. As long as this structure is supportive, they're trying to come here. Okay, so that's pretty much it for Bitcoin. So Ethereum is coming into this trade zone. This is a super key area. Now, given the overall tone, there's very little fear out there in the market right now. You probably want to be a little bit cautious if you're looking for any kinds of sells. This is also a good amount of space now over this value area low to defend at 2312.65. So if these sellers are going to mean business from here, they should try to reject from this structure. As of yet, there is no indication of that whatsoever. So if you are being a little bit more of a conservative operator and you're not blindly scaling into this trade zone, especially, and I don't suggest that because again, the general tone is very strong. There's really very little fear. But if you are looking for this sell, what you want to do probably for the safest thing is, okay, let's see what happens here. If you break above and you don't see follow through again, you fall back down under, okay, then it's reasonable to top fish off of this point of control area, throw your stop over whatever local high forms, and then try to get here first. And you do want to be very protective with this because again, there's very little fear out there. So risk on environment as of right now, this is definitely the key structure that's currently being tested. And so that is pretty much it. Now, if you are saying, you know what, Lamont, I hear you regarding the tone. I agree with you. There's not really that much selling being done out there. I want to look for a buy. Fair enough. There's also a very reasonable buy zone. Just like this, because you know that this is now a bit of area of demand, right? We know that there was balance here and breakout. This must be demand that's coming from this area. So something like this, looking for a play, back testing this value area low, trying to come here is also very reasonable. I mean, you can do both. Like if you are, depending on your exchange or whatever, or if you have access to two platforms or whatever, you can trade against yourself. If you can look for that sell, you can look for the buy as well. Okay, so something like this is very reasonable for Ethereum. Not that much risk. I'm kind of interested in this, honestly. I don't really have that much crypto exposure. I'm mostly cash in my crypto accounts, so I'm rather interested in this buy. I'm more interested in the buy than the sell. The sell is reasonable as well, but I'm more interested in this buy. Lots of space for a daily higher low. Anything over 2266.14 is going to be good for one. And if you do hold this value area low, we know these buyers are going to try to come here again, and then they're going to try to come here. And if they can clear that point of control, we know they're going to try to come here. So the R multiple for this is quite good. I rather like this setup. I like this setup much more than the sell. Obviously, things can change if a lot of fear enters the market next week. Okay, we'll see. We'll reassess. But as of right now, given all the information that we know, I rather like this trade as opposed to the sell. Sell is still reasonable. You know, especially if you're like big on other things. If you have a ton of Bitcoin that you're looking to hedge or something, then looking for that sell is pretty reasonable. You know, obviously different people have different goals, so it's a matter of always adjusting to taste, right? Whenever you get any kind of information from any kind of any other operator, you just want to understand where they're coming from so that you can contextualize that information and then adjust to taste for yourself. So that's pretty much it for Ethereum. Moving on to CCJ here. So CCJ, negative reaction to earnings, and as of right now, there's not really that, you know, it's not really a big deal right now. The red flags are not really that apparent. If they can hold over 42.31 and 38.87, that pretty much be the best case scenario from here for these for this very popular uranium name. Like, you know, you could trade URNM, which is like the ETF for the miners, but the liquidity is just not as good. So personally, just going to stick to using CCJ as a bit of a bellwether here. And I am interested in this as well. I would love it if they started drilling. If they would start drilling and then come down here, crack this value area low at 3.25, that would be great. Like, I would prefer that, because look at all this demand that was built over here. So if they could come all the way down here, right, crack this point of control, crack this guy again, but don't see much acceptance under here, pass back over here, okay, I'll look for a buy over there, targeting this and targeting this. So give this one some time. I'm not rushing into anything on this, especially because it's already, since the October low, or since the 2020 COVID low, this thing has already run 1,000%. So I'm keeping an open mind to the potential that we just balance here something like this. And if these buyers are going to stay constructive and balance something like this, the plays are going to be over here. So patience on this one. And moving on then to TAN, which is a new addition. The reason why I'm interested in TAN now is because theoretically it should go kind of against CCJ. And I think if we look up the ratio chart, it'll kind of show you that, where it spent the entirety of its, like this ratio chart essentially has ripped, moved all the way back to test the lows, and then boom, now we're all the way back to testing the highs. So CCJ potentially now weakening, well, it is weakening against TAN off of this bit of supply here. Obviously it's a ratio chart, so it's not real supply, but the idea is if we're going to top out here just like we bottomed out here, then, you know, think about it, right? This is CCJ, this is uranium, this is nuclear energy up against TAN, which is solar energy, right? And so these two are kind of competing for the same market share. They're in the same sector, cleaner energy relative to ONG. Nuclear is actually, you know, it's actually quite safe, very clean to operate. So, you know, assuming you can keep the reactors cool and whatnot, and that there's not a major meltdown or whatever. But again, statistically speaking, nuclear is actually incredibly safe. So, yeah, obviously it's hard to quantify like environmental damage or whatever, but from the perspective of how many people die, you know, extracting nuclear energy compared to how many people, you know, die from the ONG exploits, it's nuclear is actually rather safe. So, but that being said, again, there, you know, you probably need both. You probably need, I know this is a bit tangent here, but you probably need both to carry us over into our energy needs, heading into the, you know, decades ahead. You probably need both clean energy coming from solar and wind, and nuclear. Nuclear, as of right now, you probably honestly get more bang for your buck, because, you know, for example, wind is very hard to maintain. Those rotors are not reusable. Those big old windmills are not reusable. Not you know, plus it's not always going to be sunny, it's not always going to be windy. The amount of infrastructure necessary to create enough energy from solar and wind, we're just not there yet. It's going to take so much more in order to support like most major cities. So we'll probably need nuclear as well, but they're competing in the same space. So you're very likely going to see push and pull in these as like one falls out of favor. It's kind of like Bitcoin and the altcoins, you know, it's kind of like that. And I would actually consider the clean energies names to be more like the altcoins, because if you just pop into the solar sector, I'll just show you. If you just pop into the solar sector and look at some of these names, these charts look really bad. EMPH is not terrible, but SEDG looks terrible. DQ looks not so great. CSIQ, not so great. FSLR, it's okay actually. FSLR is not so bad. We can look for it down here if anything in the future. CWEN, not looking so great. Anyway, you get it, right? So the idea is these and this is with a lot of government subsidies and grants and stuff too. You know what I'm saying? So it's not looking so great for a lot of these names, particularly Run, SPWR, HSI, Nova. None of these guys look so great. JKS is literally, I think, the largest manufacturer of panels, and this is what they look like. It doesn't look bad, you know, as long as they can hold over this. You know, JKS is actually one that I was, you know, considering of using instead of TAN. I think I would use JKS, but that would be, you know, obviously a private for subscribers idea, you know, because these are just the, you know, this is the public video. We're just doing the sectors overall look at stuff. Obviously, we still give you some ideas, but if you want those, you know, really bespoke ideas, updates sent to your mailbox from Dan, from myself, from Lori, then and Funk, then you know, check out the storm report. So anyway, that's pretty much it for. Oh no, I'm sorry, we didn't finish TAN. But TAN is back testing this prior area of supply now acting as demand. And what really stands out to me is this: the fact that you do not touch down to the point of control here or here. So now, if these buyers can clear this value area high, they should be trying to come here again. So this is actually a pretty good setup for. In the near term, especially if you get some daily retracement to look for that daily higher low and then look for that session to session setup that I described when we were talking about NVDA. Okay, so that is pretty much it. Now, bigger picture, if you're looking for a trade zone for something like this, the idea is essentially at this point now, you don't want to lose this. So we can look to bottom fish, because if you get caught up here, right, if these buyers get caught up here, where are they going to come back down to? They're going to try, the sellers are going to try to test this area. And as long as this point of control is holding price, they should be trying to come here. So a more conservative trade zone for for TAN buyers is something like this. Right? You don't want to give it too much wiggle room. And we'll look to the left to see how much wiggle room, or to try to assess how much wiggle room we should give this thing. And so let's look for some major structure from over here. Hang on. I would say like no later than here-ish, right? Something like this, pretty reasonable area for that last fill. You can see how that major high was made over here. Another one over there, so pretty reactive. So if we're gonna give this guy a little bit of wiggle room, yeah, it would be something like this. All right, and your first target would be here. Oops. And your second target can be all the way up here. So our multiple on this is quite good. And ideally what we'll see is more balance over this point of control under this value area high. We can use that to position, and then runners should be trying to come here next. And then if you can get that chop, I would just walk the stop for the rest. So that's pretty much it for TAN. MSOS, checking in for MSOS. So they're still dangling that carrot. And remember, we were looking at this key area of supply over here from 10.1822 to 11.10. So a little bit of a double top here. Now we're pulling back. So the best case scenario for these buyers going forward is to hold 870. This 870 level is this prior low over here. As long as, I'm not sure where they're too, as long as these buyers are holding over 870, then we should expect price action that looks like this. Okay, so trade zone in the near term, this is a in my opinion, a very reasonable trade zone, because as long as you are holding over this guy, right, holding over this structure, holding over this structure, holding over 870, therefore holding over 870, something like this makes a lot of sense, right? It's probably more wiggle than necessary, but something like this, very, very reasonable, just like that. Because if we do hold over here, if they do hold over 870, if they do hold over these areas of supply now acting as demand, then we're not coming back down here, we're not coming back down here, we should be trying to come up here, and then if that holds and you see higher highs, it should be trying to come here next. This guy. Why this guy? Because this guy is clearly what's been problematic throughout all of this balance over here. So if we stay over, as long as we're holding over here, they should be trying to come here. So you put that all together, and this is a very reasonable trade zone. The risk is pretty high, 8%, but the R multiple on it is sound. Okay, so this is a situation where you just want to be very mindful of how you calculate your risk. You can use like calls. If you use calls, then you should probably set your risk. You know, pretty much you should let the cost of the debit be the stop, right? Just don't. That way you never really open yourself up to even max risk, because if the cost of your debit is your max risk, and then let's say you decide to stop out early, well then obviously you didn't hit your max risk, right? This is a very straightforward way to trading options. I find it to be the best way. I prefer it like that. I usually will, do my sizing based on what I'm willing to lose. Like if they all go to zero, they all go to zero. And I, in my mind, it is already zero. Like the moment that I buy a call or a put, in my mind, I just consider it gone, right? And that just helps psychologically, you know? So anyway, that's pretty much it for MSOs. This is a very reasonable trade zone in the short term. And eyes on 905 and 870, these are going to be the key levels, okay? All right, so let's do the boring broader market stuff. We'll do a quick broader market rundown. All right, so the SPY, new highs, new record highs, space for a daily high or low, anything over 482.86 is going to be good for one. And if you're a bit of a SPY trader, then something like this becomes very reasonable. If you're looking for a potential high or low, something like this makes a lot of sense because you know if they don't trade through this guy, then no big deal. Okay, so if we see that pullback here, something like this, just trying to get back to here. If we were to come back down here and hold this high volume area, very reasonable. So again, space for a higher low over 482.86. On the weekly time frame, also tons of space for a higher low over 466.43, but there's really no signs of weekly consolidation yet, so we shall see. Moving on to the Qs, same idea. Blue sky breakout, space for a daily higher low over 416.79. Anything over that's going to be good for one. If they can hold over this area of sideways here, that would keep these buyers absolutely the most confident. So trade zone, something like this would be pretty reasonable. Again, you'd just be looking to get back to these local highs first and then see if the market will give you more. Again, lots of space for a higher low to be set on the daily time frame. Lots of space for a higher low to be set on the weekly time frame as well, even if you're just looking at this last little rinky-dink one at 416.79. So again, no red flags in the market as of right now. Of course, things can change very quickly. Swing Report subscribers will let you know if there's any kind of major tone shift. And yeah, so that's pretty much it. Very reasonable. And then for the Dow, so the Dow just kind of grinding up here. I think we got a 38766. No, so this is a bit of a double top here and space for a daily higher low over 382.12. You know, I can't really quite put my finger on why, but I would personally be a little bit more cautious in the Dow. It's just looking like more grindy. It's not as impulsive as what SPY and QQQ is doing. So the Dow is looking a little less impulsive. But that being said, as long as 378.25 is supporting price, then there's really no problems here. And even if we just balance over this, that would be fine for these buyers. It would be totally constructive, just like this balance under this structure was fine for sellers, just like this balance under this balance was fine for sellers. The opposite is true now for these buyers. So bigger picture, I would be a little bit more conservative with the Dow just for those reasons that I just mentioned. And something like this, I think would be pretty reasonable. Again, you are just trying to get back to the prior high. So something like this, pretty reasonable for the Dow. Now the daily trend is still bullish, space for a higher low to be set over 382.12. Weekly time frame is also, of course, bullish. Space for a higher low to be set over 371.34 upon any retracement. And essentially, this trade zone would be pretty much for a weekly higher low attempt. Okay. Moving on to the IWM here. So IWM, remember we were talking about how key this area is. This point of control at 199.26. This is the supply zone. That's the point of control of the supply that has rejected and contained price for over a year. So this has been in place since April 2022. So over a year, nearly 2 years, price has been contained by this structure. This is the most acceptance that buyers have been able to find above this value area low at 194.84, and we closed pretty much right at that point of control. I would not be surprised with a gap on Monday because you closed at the highs as well. And so you squeezed everybody out of here. And so you look to your left, and this is not, this is not one-way trade, so it doesn't have to be super squeezy here, but you would still be trapping people if you were to gap up here. And if you are to gap up here, eyes on 205.46. Because the idea is, if the more acceptance that you can find over 205.46, the more you're squeezing out the sellers from this structure. And if you just look to the left, right, over this high, roughly 205.46, this is pretty much a one-way bar, right? So if they do happen to gap, press over 205.46, now you're squeezing these folks. So yeah, I think this is a very interesting location for IWM. Dan is already in a swing, I believe, but if you're looking for a trade in the near term, even I would go all the way down to here and that would still be fine, because if you were to backtest this area, as long as you hold over this area of demand, they're doing fine. As long as you're holding over this area of demand, then this breakout is not being negated. So something like this, trying to get here, I think is very, very reasonable. If instead you pop over this point of control on Monday, and then you start looking for that daily pullback, fine, just move this up a little bit. And this would be a pretty reasonable trade zone as well. So that's pretty much it. Two options here for IWM. Space for a daily higher low over 190.06. Anything over that's going to be good for that daily higher low. Weekly time frame as well. Actually, we've not really made space for a weekly higher low yet. Potentially, technically we just set one here at 190.06. So ideally, we'll see a move over this key resistance 205.49 before we start looking for that next weekly higher low play. So essentially, this is really just looking for a daily higher low play or further balance under 199.26 over this key daily no change level 187.92. Okay. So that's pretty much it for IWM. Moving on to the dollar here. So as we were saying with the dollar buyers are doing just fine as long as they're moving sideways and higher. If you do happen to clear over this area of supply, well, technically prior demand now acting as supply, this could put more pressure on these asset buyers. So we do have to be mindful. If the dollar starts to rip, especially if it starts to rip over 106.335, that would be pretty notable because this guy over here has pretty much contained the dollar for 2 years or so. Very, very similar to how IWM was contained by that area of supply. The dollar is being contained by this fellow over here. So yeah, that's it. We just have to be mindful of the dollar. If you're a dollar trader, this still is a very reasonable trade zone, but because you didn't pull back into this guy, this is also very reasonable. At this point, though, you probably adjust this to here, and then if they do hold this, then they should be trying to come here. So if you're a dollar trader looking for that daily higher low, this is a very reasonable setup as well. You can even come and look for a little wick down with no follow through, something like that. Improve your R multiple a bit, of course, at the cost of a little bit more range. So that is pretty much it for the dollar. Space for a higher low to be set. Technically, we set the higher low already over here at 103.805. Got a break over 104.465 to continue this daily uptrend. And then the VIX finally is really not doing anything as well. It's, just grinding these lows. It's certainly, it's certainly getting to the point where you would expect some kind of rug pull or some kind of more meaningful selling, but as of yet, there are just no signs of that. So we can keep an eye on the VIX. If the VIX starts climbing while the market is also climbing, that's going to let us know that you're having people looking to start hedging their longs, and that's going to be a good early indication that the potential for weakness is increasing. So that is it. So I appreciate you tuning in. Thank you for sharing some of your time and energy with me. I hope you enjoyed some of this analysis, and hopefully you can capitalize off some of those hypothetical trade setups in the near term. So again, appreciate you tuning in. Thank you for sharing some of your time and energy with me. And if you're interested in the swing report, you want fresh trade ideas sent to you every single week, updates for those ideas sent to you every single week, then give us a shot. Links in the description below. And if you could hit us with a like and subscribe, that'd be very much appreciated. And I'll see you all next week. Farewell.